Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
So how have the markets been behaving?
Well, it seems that the US dollar is more or less solidifying its stabilization. But in my opinion, there seem to be some slight bearish tendencies. And should these bearish tendencies actually be extended in the American session, we may see the US dollar losing some ground. Other than that, I would be noting that during today's Asian session, we had Japan's preliminary GDP rate that was for Q3. Now, the rate was expected to slow down. It did. It didn't actually only slow down, it dropped into the negatives. And that showed a contraction for the Japanese economy, which was not expected exactly for the Q3. So, on the one hand, that's worrying. On the other hand, we have to note here that the contraction of the Japanese economy for Q3 may more or less allow for more leeway for Bank of Japan, given that the bank had maintained a very dovish stance, and given that the Japanese economy contracted, BOJ is going to be finding some further ground to add to its dovishness. Other than that, I would also note from China the release of the retail sales growth rate. We had the industrial output, the urban investment. I would be noting the retail sales, which dropped into the negatives as well. And that tended to imply that the internal demand of the Chinese economy is waning. And that could be spelling trouble. And it could be spelling trouble not only for China, but also for the Australian export sector. So we're getting a number of, I would say, worrying signals. And I think that may cause the market to be a little bit more cautious, FX-wise at least.
Are US stock markets also stabilizing?
Yeah, I would note them more like we see hesitation on behalf of US stock market bulls. Now we have earnings releases today, which may start shifting the market's attention towards retailers as we're getting the earnings report for Q3 of Walmart and Home Depot. Mind you that I think on Thursday we're getting Alibaba, and on Friday we're getting JD.com. So we may see the attention of the market changing sector into retail, and definitely Walmart is a measurement also about the health of the retail industry in the US and the demand side of the US economy. Other than that, I would also be noting that we saw some headlines about Amazon, which is about to lay off about 10,000 employees. That would be around 3% of the total workforce of the company. And that's an issue. It's an issue on multiple levels. One, let's not forget that big tech companies like, say, for example, Facebook had layoffs, massive layoffs. Twitter, despite that being already listed, Elon Musk fired half of the personnel. And now we see that Amazon is also to proceed with massive layoffs. That's a worrying sign. That would also be meaning that practically Amazon's financials have some difficulties. And I would be highlighting the period, the timing of the layoffs. We're talking about a period where practically it's just ahead of Black Friday and the critical Christmas season. For Amazon, it's huge. And laying off about 10,000 workers ahead of the Christmas season could be an issue.
And how about gold's price?
Well, gold's price, after the wide gains it had last week, seems to be edging slowly but steadily higher. It seems like the bulls lost some steam but are still present. And I would be linking that also with another indication of USD weakening, given that there is a negative correlation between the precious metals price and the US dollar. So should the US dollar actually weaken further, we may see the bulls for gold advancing higher.
And what's on the calendar for today?
Well, we have a busy Tuesday today. We already had UK's employment data. And we have to understand the UK employment data are just the kickstart for a string of releases, high impact financial releases from the UK. Today we had the employment data, which more or less were not so bad, but there was a worrying figure. We had the employment change figure, which remained deep into the negatives. It failed to actually rise as much as the market expected. And we have to note, though, that we are also getting from the UK the CPI rates tomorrow. We are also getting on Thursday from Jeremy Hunt, the finance minister of the UK, the autumn statement. And on Friday, we're getting UK's retail sales growth rate. So we expect pound traders to be rather busy in the coming days. And overall, I would be focusing on that currency specifically. Other than that, I would be noting that we already had Sweden CPI rates, with the core CPI rate actually accelerating beyond expectations, something which may tilt Riksbank's stance into the hawkish side. During today's American session, I would be noting the US PPI rates and the New York Fed manufacturing. From Canada, we are getting the wholesale trade and the manufacturing sales, albeit we have to note here that loonie traders may be holding out for the CPI rates tomorrow. And oil traders, I think, will be focusing on the AP weekly crude oil inventories figure. Should there be another substantial buildup of inventories, we may see oil prices weakening somewhat. Mind you that oil prices have been relatively stable in the past few days. That's an issue, because should oil reserves in the US actually rise further, that would imply that demand is still not able to reach production levels and we have a slack. During tomorrow's Asian session, I would be noting from Japan the machinery orders growth rate. That would be for September, and I would be also noting, especially from Australia, the wage price index, which is for Q3. Given that on Thursday's Asian session, we're getting also Australia's employment data. So the one complements the other. That should be it.
Great. Any final comments?
Well, we have some movement in the monetary front. We are getting from the Fed, Philadelphia Fed President Hager, and I think we're having also Fed Board Governor Cook, while we're getting from the Eurozone, ECB's board member Alderson. It's interesting, especially the US policymakers, the Fed policymakers, because after the release of the US CPI rates last Thursday, Fed policymakers did not exactly provide a clear guideline on where the bank is heading to. We had statements made by Fed Board Governor Waller and Fed's Vice Chair Brainerd, which were pretty close. They both said that there are still rate hikes ahead. However, the rate hike path may slow down a bit. Now, should we see the Fed policymakers reiterating and tilting a little bit more to the hawkish side, we may see the US dollar getting some support. Other than that, they may weaken the US dollar.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. Now, in front of your screens, you have the US dollar index. As usually, we'll make a start with that. And we're having the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Okay, now with no time to waste, let's make a small comment here on the US dollar index. It seems that the bearish tendencies for the dollar are still present. And in that case, we may note the stabilization which was evident in the past 2 days, actually since Monday, being more of a correction and not a change of trend. And that would be evident by two reasons. The first would be the steep downward movement during today's European session. One. Two, we have an RSI indicator which dived below the reading of 30, which more or less tends to imply that the bearish sentiment is dominant right now. On the other hand, though, we have to note that the fact that the RSI indicator has dropped below 30 may also imply that the index may have reached once again oversold levels and maybe ripe for correction higher once again. For the time being, though, we have to correct the 106.1 support line, which seems to have been broken, albeit not so clearly yet, nevertheless. Should solidify if the bears maintain control. Let's go hunting for a new ultimate support line, and that could be placed. See these double peaks here, throws here, sorry. That would be a nice point where practically that would imply that it has some support. Let's make it in green, 102.10. Let's readjust the chart. Let's readjust also the labels and correct them. $109.10. Second resistance line now being placed at 107.45. First resistance line being placed at 106.10. First support line being placed at 104.5. Second support line being placed at 103.20. And final support line being placed at 102.10. Let's lock everything in. Voila, ladies and gentlemen. We have a downward movement which has just broken below the 106.10 support line, not into resistance. Given the RSI indicator below our 4-hour chart, that it's below the reading of 30, I would expect initially the downward movement to be maintained, and I wouldn't be surprised to see the price action reaching for the 104.50. On the other hand, we have to note that the RSI indicator dropping below 30 may be implying, as we have mentioned before, that the pair has reached, so the index has reached oversold levels and maybe ripe for correction higher, or at least a stabilization, in which case we may see the price action revolving around the axis of 106.10. Now, I wouldn't be also surprised to see the price action should it stabilize. I'm stressing that. Also correcting a little bit higher and remaining in this spectrum here. That would imply practically a respectance of the 107.45 and the 106.10. It's very interesting how the index is going to be reacting in the next 4 hours, especially ahead and during the US opening. Another argument, if you prefer, for the bears would be that the stabilization of the US dollar index has allowed for the price action to create a certain distance with the lower Bollinger Band. And given the low market sentiment, the bearish market sentiment, as per RSI, that would allow the price action to drop pretty low. There's plenty of room for the bears to play in. So once again, should the bears maintain control, I would expect the price action to drop, play some distance between itself and the 106.10, and actually aim, if not even test, the 104.50. Should it reach the 104.50, we may see some stabilization again, as it would be practically hitting on the lower Bollinger Band, which will move lower, but due to the fast pace of the drop, may not be able to react as fast. A possible stabilization could be occurring also, given that we have the RSI indicator below the reading of 30, and may imply that the index has reached oversold levels. Now, in which case we may see the price action of the index remaining or revolving around the 106.10. That would be a stabilization, as would also be a movement between the 106.10 and the 107.45, something like this. For a bullish outlook, I would require the price action to rise, definitely break the 106.10, also break the 107.45, and start aiming for the 109.10. Now, there are some colleagues at the research department, a company, which have mentioned this. It's a downward trend line which rests practically on two peaks, could be valid. Actually, some would accept it. I would like to see more peaks supporting such an downward trend line, sorry. But yeah, that's an additional argument for the bears. Okay, by the way, let's delete this one. Okay, let's have a look at Euro USD. Should be a similar picture in the reverse though. And it is. You can see that the rise here is more intense. Let's readjust. Has broken clearly the 1.0360, a level which provided resistance here and here, now has been broken. It went through it like hot knife through butter. Okay, let's make the necessary corrections. Definitely the 1.0360 has to be reversed now from a resistance line to support line. Let's go hunting. See this sideways movement here? I'm catching the peak of it as the next possible resistance line. It's a little bit wide, but I don't care right now. It's definitely in the red. Symmetry is not one of my main priorities right now. Would be more focused on touches, on peaks and shows. It's a little bit old school, I know, but find it far more reliable. Okay, let's start correcting also the labels. Get a clearer picture. There we go. And starting with the S3, which is now being placed at 1.0095. Second support line being placed at 1.0220. First support line being placed at 1.0360. And the first resistance line being placed at 1.0485. Second resistance line being placed at 1.0685. Sorry, 1605. Let's correct that. And final resistance line for now being placed at 1.0785. Once again, bullish outlook in play due to two reasons. The first reason is that the pair was finally able to break above the 1.0360 resistance line, now turned to support. That would be an evidence of a bullish movement, decisive bullish movement. On the other hand, I would be highlighting also the RSI indicator, which is below our 4 chart and is currently above the reading of 70, implying domination of the bullish sentiment among traders. And in such a case, should we see the bullish sentiment being maintained, some have argued that an upward trend line like this would be in place. Could be, could be not. Nevertheless, should the bulls maintain control, I wouldn't be surprised to see the price action breaking above the 1.0485 and start aiming for the 1.0605. Now, we have mentioned that the RSI indicator is above the reading of 70. It's currently at, let's have a look, 73.8. So, yes, definitely that would imply that there is a bullish sentiment, a clear-cut bullish sentiment for the pair. On the other hand, though, that could be also implying that the pair may have reached overbought levels and maybe ripe for a correction lower. Catch is that the upper Bollinger Band has still some distance between the price action. It's actually right at the 1.0485, so practically the price action could be allowed to advance further up until the upper Bollinger Band and continue higher, moving along, flirting with the upper Bollinger Band like it did right here. It was a beautiful upward movement, which was practically capped. Nevertheless, should the correction take place, given that there is an indicator maybe implying that the price action is at overbought levels for the pair, we may see the price action stabilizing, breaking the upward trend line we have just shown, and remaining between the 1.0485 resistance line and the 1.0360 support line, something like this, the sideways motion. On the other hand, should the bears take over, which may seem improbable but should not be excluded, it's a possibility, in which case we may see the price action reversing direction, breaking the upward trend line, and that would be the first sign of a trend reversal. Break the 1.0360, that would be a sign that not only did the trend change, but it would also be signaling an exit from a possible sideways scenario. And we would require clearly a lower true than this one. So we would expect the pair to drop, break the upward trend line, break the 1.0360, and start actively aiming for the 1.0220. Okay, let's have a look at GBP USD. Cable which, despite the rise, and it's interesting because it differs substantially from Euro USD. We can see that Euro USD has a clear-cut bullish sentiment. The RSI indicator is above the reading of 70. There are all the bullish prerequisites there. Cable does not. Cable was not able to break above the reading of 70 in the RSI indicator. So practically there are bullish tendencies, but it's not a clear-cut bullish outlook. On the other hand, we see that it still wasn't able to break above the 1.1855, a level which provided substantial resistance here. And that would be a sign, in my opinion, that despite the USD weakening, it seems that the pound as such is also rather weak. And that balances out on cable. Nevertheless, for the time being, we tend to maintain a bias for sideways movement to continue, and that will be kept up until cable is able to clearly break above the R1 1.1855. Should that be the case, we may see the price action of cable starting to aim, if not even breach, the 1.2020 resistance line. So that would be a movement like one break of the R1, rise, reach of the R2, maybe even breach it, and start aiming for higher grounds, i.e. the 1.2275. At this point, I would like to have a look at the validity of the resistance lines. Definitely the first resistance line is valid given that we had a peak here. So it was a level which provided resistance in the near past. Let's have a look at the R2 and the R3. And we can see that, the R1 had provided resistance here as well. Okay, the R2 was a former support line. Yet if we go further back, we can see that it also provided resistance. So practically, it's a level which seems to have some, not just sort of validity, it's valid. It was tested multiple times to the upside, like here, and to the downside, like here. The R3 definitely is a clear-cut resistance line which provides resistance here and here. So that's valid as well. So we're keeping them. Let's have a look now at the possibility of a stabilization of the pair, in which case we may see cable remaining between the 1.1855 and the 1.1640, somewhere like this. In case we have a bearish outlook, a selling interest, we may see the price action dropping. Definitely would require clear breaking of the 1.1640 and start aiming for the 1.1455. Once again, sideways bias is being maintained until the pair clearly breaks the 1.1855 resistance line, and that would be the signal for a trend reversal from a sideways movement to a bullish outlook. The USD-JPY, safe haven currency pair USD-JPY. USD-JPY, which interestingly enough maintained a clear sideways movement. I would be noting that there are some slight bearish tendencies present, given that we have an RSI indicator below the 4-hour chart, which is just above the reading of 30. It's actually right now at 32.4. So, yes, there is a bearish sentiment present. However, on the flip side, I would like to see the price action breaking clearly the support line of 138.45, marking a lower true than this one. And it does have the ability to do it, given that the Bollinger Band, the lower Bollinger Band, is far lower than price action, allowing for substantial room for the bears to play here. So, for the time being, I tend to maintain a bias for sideways movement between the 138.45 support line and the 140.70 resistance line. Note how it was tested here. For a bearish outlook, I would require a clear breaking of the 138.45, a lower true than this one, and the price action to start aiming actively for the 136.15 support level. Now, in case we see a bullish movement, which is not among our main scenarios right now, but still possible, we may see the price action reversing direction, breaking the 140.70 resistance line, and that would be a prerequisite for a bullish movement, as we would require a higher peak than this one. And the price action to start aiming for the 142.40. It's a very nice sideways movement of USD/JPY, which traders could take advantage of at any given moment. But beware that the trend may change, and the sentiment for the time being seems to be tilting towards the bearish side. So it's something to keep in mind. It should not take you by surprise if we see the pair moving decisively lower. Let's have a look at USD/CHF. We get, I think, a clearer picture here. Actually not. It's slightly clearer, but still not clear enough. We see that, okay, we see that the bearish movement seems to be continuing. It's characteristic that the pair has broken just slightly, just below the 0.9395 support line. The RSI indicator below the 4-hour chart is clearly below the reading of 30. It's actually at 24.3, which tends to imply a very bearish sentiment of the market. On the other hand, yeah, let's keep the bearish sentiment, see where it leads us. Now, the main element here is that the price action is struggling right now with the 0.9395. Should the price action clearly break below it, but clearly putting some distance, say for example 50 pips lower, that would imply a bearish sentiment and that the bearish movement is to continue. Note that there are lower peaks and lower troughs in the past 24 hours, also implying a bearish sentiment. The RSI, the Bollinger Band, the lower Bollinger Band is far lower, allowing for some room for the bears to play here. Nevertheless, should the bears take over, we would expect the price action to break clearly the 0.9395 and start aiming for 0.9285. In this case, compared to USD/JPY, the bearish sentiment is, the bearish movement is more evident. On the flip side, given that the RSI indicator is below the reading of 30, it may also imply that the pair has reached oversold levels and the price action may be ripe for a correction higher, in which case we may see the price action stabilizing between the 0.9495 and the 0.9395, something like this. A bullish scenario, which may be the least probable one, but still it's possible and deserves a comment here. That would be taking the market by surprise if, for example, a strengthening of the US dollar would be implying that the price action rises. Definitely would require clear breaking of the 0.9495 resistance line so that the pair is able to mark a higher peak than this one. So it would be rise, break of the 0.9495, and start actively aiming for the 0.9625. You can see how the price action is currently once again trying to break to the downside the S1. It's a very intense moment. Okay, let's have a look at commodity currency AUD/USD. Whoa, we haven't visited this pair for you. Days. It was high time. Okay, let's make the necessary corrections. First, we have to reverse all the resistance line into support lines as the price action has broken above them. Even the final resistance line, the 0.6670, has been broken. And definitely we have even higher. You have another resistance line somewhere here. This could be corrected a little bit to the low side, like this. Yep. In green, 0.6660. See this peak here? I want this peak. And actually there is a resistance line right now, right there. So this is the price action. You have a double peak here. Very close to the price action. Let's keep that. Also, it was tested to the downside. Seems to be pretty valid. I'm keeping that. And that would be the, in red please, not gray, red. The 0.6770. It's just about where the price action actually is right now. Second resistance line. Former support line. Tested also to the upside. Provided resistance. I'm keeping this. And that would be the 0.6855 in red. Now the last resistance line, I know it could be placed here. It's an easy target. In my opinion, that's a mid level. I would be aiming higher. Somewhere here. A little bit lower maybe. There. We have touch here, and the touch as a support line here. I'm keeping this. And that would be the 0.60, let's call this in red first, 69.95. Would be easily the 0.70. Let's have a look at it. Yep, it's lower. Still lower. 70. Once again, retesting it. Actually, kind of like it. Test, test. I'm keeping this. Okay, it's a little bit far off. I don't care. Nevertheless, we should know that there may be a mid level. Yeah. Okay. Let's readjust the chart. $0.70. R2 being placed at 0.6855. R1 being placed at 0.6770. S1 being placed at 0.6660. S2 being placed at 0.6545. and S3 being placed at 0.6465. Now there's an upward movement which cannot be neglected. There was a stabilization here, but I think that we have an upward movement which is quite bullish. Note how the RSI indicator below the 4-hour chart is clearly above the reading of 70. It's actually right now at 73.75. So there's definitely a bullish movement and a bullish sentiment which supports it. On the other hand, though, bulls may start pondering whether they have reached a little bit too far, and some stabilization could be in place or even a correction lower. It would be interesting to note whether there is an upward trend line here. Drilling out to the 1-hour chart, something like this. Back to the 4-hour chart. Let's extend it. Okay. So for the time being, we maintain a bullish outlook for the pair, and I would expect it to break above the 0.6770 and aim, if not even breach, the 0.6855 resistance line. In such a case, we note that we have a mid-level at 0.6115, while even higher we note the 0.70. Should, on the other hand, though, AUD/USD bulls actually feel that they have reached too far and the pair corrects a little bit lower, I would be expecting a stabilization scenario, which would be practically implying that the price action remains between the 0.6770 and the 0.6660. Definitely a stabilization of AUD/USD would be marked also by breaking of the pre-mentioned upward trend line. That would be a first signal of a trend reversal. On the other hand, despite the bearish scenario not being in our plans right now, we may see the price action dropping, breaking the pre-mentioned upward trend line, breaking the 0.6660, and start aiming for 0.6545. That would be a clear bearish scenario which would be in play. Let's have a look. We still have time. And let's have a look at USD CAD. The other commodity currency pair, which we haven't visited for a long period. And I would like to have a look at it because, okay, definitely there's a downward movement. But I would be noting that we need some readjustments here. Okay. It's beautiful how the price action aimed for the 1.3225 down here. Okay, let's start. Definitely the 1.35 has to be turned into a support line, a resistance line. So is the 1.3385. The 1.35 could be a little bit higher. At 1.3515 maybe, or 20. Could be even higher, 1.25. Yep. Providing resistance here and here, tested to the downside here, slightly broken here. I'm making the adjustments. I'm keeping the 32.25. Actually, that could be a little bit higher, 1.3230 maybe, 5 pips. Yep, touches. I'm keeping it. Okay, let's go hunting for new support lines. You have one level here. These touches here are interesting. I'm keeping it. And that would be the 1 point. Let's have a look at that. 1.31. Oh, that's too high. 1.3095. In green. And this final support line definitely would be this true here at 1.2950. Let's readjust. Let's correct the labels. $1.2950, 1.3095, 1.3230. First resistance line now being placed at 1.3385. $1.3525 and final resistance line being placed at 1.3675. For the time being, I expect that the pair seems to be showing some signs of stabilization. You can see that it has some difficulty surpassing below the 1.3230 support line. So a stabilization is quite possible. On the other hand, though, note that the RSI indicator is pretty low. It's actually right now at 34. So a bearish tendencies may occur. However, for bearish outlook, I would require a lower true than this one. So I would require clear breaking of this 1.3230, and the price action to start actively aiming for the 1.3095. A possible bullish scenario, which may not be probable right now, but still a possibility. We may see the price action rising, breaking above the 1.3385, and start aiming for the 1.3525. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Welcome to another of our videos. Today we'll be looking at a gap. So, what is a gap? A gap is an area on the chart where the price of an asset moves sharply up or down. There is little or no trading in between. As a result, the bar or candlestick chart shows a gap in the normal price pattern. Traders can exploit these gaps for profit. Basically, gaps occur because of underlying fundamental or technical factors. Gaps can appear in the forex market, but they are less common than in other markets because currencies are traded 24 hours a day, 5 days a week. However, gaps can occur when economic data is released that is a surprise to markets. Also, gaps can occur when trading resumes after the weekend or a holiday. Although the Forex market is closed over the weekend, the market is still open to central banks and related organizations. So it's possible that the opening price on a Monday morning would be different from the closing price from the previous Friday, which results in a price gap. The difference between the open and closing prices is the gap. If Monday's open price is higher than Friday's closing price, the price gapped up. If Monday's open price is lower than Friday's closing price, the price gapped down. There are 4 types of gaps. The first one is known as a common gap, which represents an area where the price has gapped. The second type is a breakaway gap, which occurs at the end of a price pattern. It signals the beginning of a new trend. The third type is a continuation gap, also known as a runaway gap, and occurs in the middle of a price pattern. This gap type signals a rush of buyers or sellers who share a common belief about the price future direction. And the fourth type is known as an exhaustion gap, which occurs near the end of a price pattern. It signals a last attempt to hit new highs or lows. Thank you for watching.
Today's session, what we're going to be doing is we're going to be doing our strategy clinic, right? So if you have questions on your trading strategy, which you'd like me to diagnose, right? Maybe you have a moving average crossover strategy, or you have a strategy on Fibonacci, Elliott wave, right? In today's session, you get to ask me all the different, you get to share with me, right, the trading strategy that I have, and I can give you my professional perspective on it. All right, guys. Now, before we begin, a quick disclaimer that everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. All right, so please do your own little due diligence before you guys trade. Okay. Now, let's begin. Let's begin today's session. All right, let's begin today's session. If you have any requests, right, let me know too. All right, just a quick introduction of myself. My name is Desmond Leong. I run the award-winning research firm Everest Fortune Group and also the Forex Army. So we are finalists for the best FX research and best equity research in 2019, 2020, and 2021. So we usually have a strong team of traders advising the banks, the brokers, the hedge funds on where the markets are heading. But we have a special partnership with IronFX where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. All right. So yeah, in today's session, right, there are only 2 things that we want to do, right? The first one is diagnosing your trading strategy. So if you have a trading strategy you want me to look at, let me know, right? I'll do my best to look at it, right? And if otherwise, right, I will, while you guys are sharing your trading strategy with me, right, I'll also be looking at some trading setups that we can look at together. Okay. Now, let's begin today's session. Okay. Moving on to the charts. Okay, so I'm going to disable my video first because when looking at charts, I'm not sure how the video is, but maybe you should be able to see more of the charts if I hide my video. All right. Okay, let's go. Now, remove some drawings. Now, let's begin today's session. So usually when I trade, right, I'll just be sharing with you guys the approach I take to trading, right? So I usually have a, I use TradingView, right? I use TradingView to do most of my analysis, right? And I have a watch list by the side over here, right? So the watch list, I have my analysis, I got futures, I got my crypto list, I got a market watch, right? So market watch is where I see most of my market watch is where I see most of my all the different, you notice there's all the different majors, right? There's a little bit of the main cryptos I'm looking at, right? In the indices, right? I got the pound, the euro, the Aussie crosses, I got a whole bunch of them by the side. Okay, so this is where I usually scroll through my the different instruments, and I see if there are any trading opportunities there, right? So let's begin. All right, let's begin. So maybe for starters, right, I usually start the day by looking at something like maybe dollar CAD, right? So how I usually analyze the trades is I tend to take most of my trades on the 1-day chart and the 4-hour chart, right? Mainly on the 4-hour chart. But what I do is I actually go onto the 1-day chart to look at the higher time frame to see if I'm missing anything out, right? So as you can see, right, if I look at the 4-hour chart, this is telling me one picture, but I will go into the 1-day chart, right? And then I will zoom out and I'll have a better picture on what is I have a better picture on what to expect, because I got a higher time frame over here. Okay. Now the important thing to take note of is that when you're trading, you don't need to, what's the word for it? You don't need to take every single trade that you're doing an analysis on. Sometimes when you're looking at a market and you're just looking at it over here and you realize that, man, there is really nothing nice to trade in this market. If there's nothing nice, it's perfectly fine. Move on to the next market. Okay. Now, I can see a couple of new guys are streaming in, right? Like Sahid, right? Temitopi, right? Foibe, right? Guys, if you have requests, if you want me to look at any specific instrument, right? We got Kelvin tuning into, right? If you guys want me to look at any specific trading instrument, right? Or you like euro, dollar, gold, or Bitcoin, let me know, right? Or if you have a particular trading strategy that you like my opinion on, right? You can let me know too, right? And I can share with you my opinion on these trading strategies, right? I've diagnosed many trading strategies in the past, right? I've created many profitable trading strategies. So if you want my opinion on them, now's the best time. Okay. So all right. So like when I'm looking at something like dollar CAD, right, I noticed that there's a lot of fluctuations, right? A lot of fluctuations in between here. In between that, I realized there's not really many trading opportunities for me over here, right? At most, I do notice that there might be a little bit of a channel, but price is mainly in the middle of nowhere. Very few clear trading opportunities for me to trade, right? But the important thing is that I notice if there is no opportunity, you just move to the next one. Now, this is one where there might be opportunity. Okay. So what I like about this, right? So if you're looking at the 4-hour chart, right, you might be looking at it and thinking that, oh man, right? Hey, Natalia, right? Nice to see you tune in, right? I'm not sure if you got your VIP room access already. But if you haven't, let me know, right? I think there was some registration problem previously, but it should be working now, right? But yeah, so if you're looking at a smaller time and you're looking at a 4-hour chart, you're just looking at prices go down, and you think that, oh man, it looks like price has broken a key level of support over here. You're expecting it to kind of go down further, right? So, okay, that's nice, Natalia, right? The VIP room will be a lot more active soon, maybe from next week onwards, because we are just finalizing the last bit of the nitty-gritty stuff, right, on getting it set up. Yeah, but it should be much more active from next week onwards. Now, so the thing with when you're analyzing a chart, okay, guys. So I see a couple of new people streaming in, right? In today's strategy clinic, I'm just going to share with you guys real quick. In today's strategy clinic, we are basically diagnosing your strategy and looking at trade setups. So if you have okay, I can see some questions coming through. All right, if you have a specific kind of trading strategy you'd like me to take a look at, just send it through. I'll do my best to look at it. Okay. Sahid is asking, what is the requirement for the VIP room? The requirement for the VIP room, right, is if I'm not wrong now, they just raised the bar. So as long as you have a $250 live account with IronFX, you can get access to it, right? So you need to go to vip.ironfx.com, right? So this is the link that I'm going to send to you, vip.ironfx.com. Once you go there, you can register for a new account, right? And then you get access to this VIP room over here, right? I think where's Natalia, right? But yeah, come in here, you have access to all the different instruments by the side. And this is where, you can come in here and you can practice your analysis, right? So like over here, you might be thinking, you come down here and enjoy this support line and you can say, hey, hey, Desmond, do you think price might bounce from this support? What support level are you referring to? You highlight the text, click this button, link object to text, and you can select the object that you just drew, right? So what happens when you send a message through is that you can see over here. When I read your message, I can hover my mouse over it and I can see, oh, this was a support line that you're referring to, right? So that gives me better context to what you're doing. It's a great place where you can practice your trend line, you can practice your stochastic, you can practice your channels, your support, your Fibonacci, your harmonics. You can practice anything. And anytime you want me to take a look at something, you just add mention me, right? Or you can add mention the other group of prop traders that we have, and we can attend to your question right away. Okay. So all you need to do, of course, you go to vip.ironfx.com, register a new account, and if you have at least $250 in your account, right, all you need to do is to click on this thing called request access, right, and upload proof. Upload proof of your live IronFX account to get full access. So you just need to take a screenshot of your live account with $250 inside, and I will approve it, right? So yeah, you just need to click on this button here, request access. Okay. I think we don't have any. Just let me check. Yeah. So we have actually 2 request access. So like Natalia over here, right? Like to gain access to the VIP room, and she has attached the proof of a proof of account size, right? I'm not going to view the whole thing, right? I can see it's over there, right? So it's enough. I will click accept, right? So I'm going to give Natalia a silver tier, right? Done. Natalia, you should have access to all the different channels by the side. I can see this guy, Carlitos, can I have access? He also wants access to it. I can see maybe he has a little bit of, he sent me a screenshot. Maybe there's an error with the screenshot, right? But if he I'll go check it with him later. But in this case, we give him the silver tier access and he will have access to the rest of the trading room. Okay. So take advantage of this opportunity and join the VIP room, right? Because it used to be free, but IronFX have just changed the deposit requirement to $250. They might be increasing it over time. So if you have an IronFX account, please just go and what's the word for it? Register for it. Okay, I think go get your spot. Once you have registered for it, though, you can actually drop me an email, delong@notesco.com. I think this is the email. I'll check the email later, but you can just drop me an email, drop me a message, and I will ensure that your approval is expedited. Okay. A couple of new people coming in. That's great. All right. Temitopi is asking, wouldn't mind some explanation on FVG and order block? Okay, I understand the meaning of order block, but what do you mean by FVG? What is there a short form for something? Yeah, maybe if you let me know, I can dig a little bit deeper into it. Okay. Now let me explain order block in a minute. Okay, guys. So the thing when you're analyzing a chart, right? When you're analyzing a chart, you need to take note that when you're looking at just at a 4-hour time frame, or are you looking at any time frame, a good habit to do is just to go one time frame higher. Go one time frame higher. So I'm at the 4 hours now. I'm going to the 1 day. Once I go to the 1 day, right? Then I might be thinking, okay, I'm expecting prices to drop further from here, or fair value gap. But I'm expecting prices to drop further from here. However, if you scroll further back, you'll notice that there is a major support level right over here, right? Major support level over here, right? Price had bounced from this level 1 time previously, 2 times previously. So it's close enough to that level where, we could be expecting prices to kind of bounce up from there. Okay. So this is the important thing with on why it's important to look at a higher time frame, because we might have been thinking that we're going to just wait for prices to drop down on dollar franc. But if you look at the higher time frame, then you realize that, whoa, there is a major support level that goes back to even, well, the last time price was at this level was at what, July 2020. So it's about 2 years ago, right? So last time price actually tested this level was 2 years ago. So it's a very, very strong level. It might be dangerous for us to try to play the move beyond this level. So instead of trying to go short, so if I was on the 4-hour chart, I was thinking, yeah, price maybe breaks this level, I expect it to go down, right? But then you suddenly realize that it's a little bit hard for you to play the drop all the way down, because there's such a strong support level over here that it will make more sense to play the bounce from here. Okay, so yeah, this is one of the considerations that when you're trading, don't just look at one time frame, look at the time frame which you're going to take your trade on, and then go one time frame higher and see if you happen to miss out any of these trades, right? Do you miss out like a super big support level that goes all the way back for the past 10 years, right? Or something like that. Okay, now guys, let's move on from here. Just give me a second. Okay. Okay, let's move on from here. Just anyway, regarding this particular analysis on dollar franc, right? Because I do want to explain it a little bit more. Before I move on to the next pair, right? This analysis, after I highlight my key support and resistance levels. Okay, so in this case, I have a key support level here. I then would do this thing called a Fibonacci projection. Right, this Fibonacci projection, I use 61, 78, and 100. So what you always tend to notice is that the 100% Fibonacci projection is pretty handy. Even the 78 was great. You notice how price touched the 78 and then bounce up a bit, bounce up. Price touched the 100, it bounce up, touch the 100, it bounce up. So these are what we call Fibonacci projection levels. If you know how to use them accurately, they are very, very effective in being able to call little reversals. They are one of the only, right? They are one of the only leading indicators out there. So in trading, sometimes we have lagging indicators, sometimes we have leading indicators. So what are lagging indicators? Lagging indicators, right? Lagging indicators are stuff like your moving average, right? Your moving average is usually a lagging indicator. Your stochastic is a lagging indicator. Your RSI is a lagging indicator. Even Bollinger Bands are lagging indicators. Many of these are lagging indicators, right? That means they require price to move first. Only when price moves, then it moves along, right? So this is what I mean by lagging indicators. So they are usually one step behind the market, right? Moving averages are one step behind the market because you require the market to move first, right? You require the market to move first before you move. So then again, it leads to the next question. What are leading indicators? Leading indicators are things that forecast, what's the word for it? They get to forecast price in advance before it even happens, right? So for example, in this case, a leading indicator like Fibonacci, what it does is that it forecasts at 100% projections over here. So it's forecasting that price will come down, touch the 100% and make a small bounce, right? So we can see, when it comes down, it touches the 100% and that's a small little bounce from here. Okay, you can see that it touches, then it bounces, right? So that is what a leading indicator does. In trading, it is important that you have a combination. You have a combination of lagging indicators and leading indicators. And so there are three kinds, right? There is I told you there's lagging, there is leading, and then there is right in the middle. Right in the middle is what you call price action. meaning this is when in the thick of the action, when things are happening. This is things in the past, these are things in the future. Okay, so in this example, right, so if I were to give you an example, lagging indicator could be a moving average, right? So maybe you have a moving average that is like support over here, right? You have a long moving average that is like support. So this is one reason why it might bounce. Okay, then you have a leading indicator. A leading indicator like a Fibonacci projection, right? It projects that this 100% might be a level where price might bounce off. So we got lagging and we got leading. What about price action? Price action is maybe when price just touches this level. You look at this. We have this kind of different kind of price actions. I know it's a little bit hard to see. That's why I'm going to come in here. I'm going to remove all my brushes, right? So maybe when you reach over here, right, what you then notice is that there's this price action over here. There's a bullish engulfing candle over here, right? There's a long wick rejection over here, right? So these are things that it forms the third part of the puzzle, right? You got lagging, you got leading, and you got, the past, basically the past, the present, and the future. When you combine all of it, all three of it together, you get a very high probability trading setups, but you must combine the right things. All right. So in this case, Fibonacci's are a leading indicator. It forecasts 100% over here, right? At the same time, we got support and resistance. You can see a very nice support in the past over here. And then, of course, we have, let's see. I think that is most of the, that's most of the reasons why we think price is going to go up. I think there's a short-term channel breakout. There might have been a short-term channel breakout somewhere about here. Right, you can see price was going lower. Price was going, sorry. You can see price was going lower in this channel and finally broke out from there. So you now have a couple of reasons, right? You have 100% Fibonacci projection. You got a nice channel breakout. You got, you got one here. We got two here. We got a nice support level over here, right? Three reasons why price might bounce up, right? And we throw an indicator, maybe look at the stochastic. Stochastic, I like to use 21, is it a 5.3? Or is it 34.53? There are some numbers that work better than the others, right? Stochastic, nice bit of stochastic that is turning upwards, right? We can see stochastic slowly going upwards. So there's a lot of upside potential, right? So this then shows me that how I got 1, 2, 3, and maybe 4 reasons why price might go up, right? If you look at it, there is bullish divergence. Stochastic is making lower highs, right? Price is making, right, lower lows, and lower lows, right? So there's bullish divergence here, right? So now you got 1, 2, 3, 4, 5 reasons why price is going to go up. So when it comes to trading, this is basically all there is to it, right? You need to try to find more reasons why price is going in the direction that you expect it to go than the reasons against it, right? So in this example, I have so many reasons why price might be bouncing up, right? I got a nice 100% Fibonacci projection. I got a nice channel breakout over here, right? I got a nice super long support that goes back for the past 2 years. I got stochastic that is bouncing upwards, and I got a bullish divergence that is that's showing that price is going, is likely going to make a bounce. So when you combine all of this together, this is what we call a high probability setup, HPS, right? A high probability setup. You are combining this is a leading indicator. This is chart patterns. This is these are called indicators, right? We're combining divergence. We're combining support and resistance, right? And we're combining an oscillator. So you combine all the different kinds of studies, right? Just to give yourself the highest chance of being correct, right? So the reason why we combine different studies is that we cannot be biased. Right? What I mean by that is that sometimes a mistake that most people tend to do, right, is that they load too many indicators that belong from the same family. Now, what do I mean by that? Right? So they might load an indicator like the stochastic, they load the RSI, they load the MACD, Did I load the MACD? MACD, right? Now, so these are all oscillators, right? And then you look at it and you say that, all right, RSI looks like it's going upwards, right? MACD looks like it's going upwards, it's going to cross, right? So all of these are essentially oscillators. So they are telling you the same story, right? So this one says yes, this one says yes, this one says yes, it's going upwards. If you are not careful, you will have, you will treat this as three separate ticks, right? You will treat it as three separate ticks, and then you'll be very confident. But the danger is that the RSI might be just telling the same story of the stochastic. The MACD might be telling the same story as the RSI and the stochastic. So they're all actually telling you the same thing, right? But just from just different forms of oscillators. So one tip that I have is that if you find yourself doing this, please don't do it, right? Try to combine different studies of analysis, right? So if you have one oscillator, that is enough. Having one oscillator most of the time is enough. Then you look at support and resistance levels. Then you look at trend lines and channels, right? Then you look at Fibonacci. Then you look at Ichimoku, right? After you look at Ichimoku, then you look at maybe divergence, right? So you combine different things to really give yourself the best chance of being profitable on a trade. Now, Temitope, fair value gap, I roughly understand what fair value gap is. I will need to dig a little bit more into it, right? I roughly understand it's more something similar to demand and supply zones, like price tends to reverse to fill up the fair value gap or something, right? I'll need to do a little bit more research into that to give you a proper answer. But I believe it based on what my initial understanding of it, yeah, fair value gaps is basically like a different version of supply and demand, right? So there is a lot of there are reasons why it will work. Okay, I will, however, now move on to the next part, right? I will now move on to guys, right? Got a whole bunch of you guys here. If you want me to look at any instrument, let me know, right? So I will just pull it up and I'll just look at it. Okay, I'll do an analysis on it, and you can watch me analyze the chart and maybe look at find some trading opportunities. In this case, we're expecting dollar franc to go up. So if it goes up, that's great. Okay. Now let's look at other stuff, right? Okay, one of the instruments that I was watching is actually Kiwi dollar. Okay, what do I like about Kiwi dollar is that it is very strong bearish momentum. I think there might be a bit of a channel. Tweak it a bit. Bearish channel. So you firstly have a bearish channel on Aussie dollar. Okay. Okay, Sahid, if there's a particular indicator that you want me to teach, let me know, right? Some of it are a little bit more advanced, some of it are a little bit more straightforward. But if there's a particular indicator which you want me to explain a little bit more on, let me know. Or otherwise, I will try my best to explain it along the way. All right. So this thing is called a channel, right? This thing is called a channel, right? And a bearish channel means that prices are going down, right? So bearish channel means that prices are going lower, 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 lower. You're expecting prices to kind of go down, okay? Bullish channels are the opposite, right? Bullish channels, you're expecting prices to go up. It's usually green in color, okay? Now, this bearish channel. So first thing we establish, number one reason, right, why price might go down is bearish channel, right? Bearish channel, I'm going to call it BC, bearish channel. The second reason, throw up the Ichimoku. So the Ichimoku, so I use the Ichimoku in a slightly different way, right? The Ichimoku Kinko Hyo is actually Japanese for charts at a glance, right? The original indicator is actually very, very complicated, right? You look at it, there's so many things there, right? So they have a lagging span, the Chico span, right? You got all this different stuff, but I feel that it's a little bit overwhelming, So what I like to do, one of the most effective tools of the Ichimoku is actually, once you disable everything, is the cloud. It's the Ichimoku cloud. You can see there's a nice little cloud over here. The cloud means something simple. If price is below the cloud, it means that there tends to be bearishness. If price is above the cloud, right? If price is above the cloud, you tend to see a little bit of bullishness. That means price tends to go up a little bit more. Now, this is not guaranteed, right? Rather, this is just one of the reasons. This is just one interpretation, right? So in this case, I got Ichimoku, I got bearish, right? The third reason is that now I'm looking at this and I see that there's a nice descending resistance line pushing prices down. And if I go down under the smaller time frame, there's also another, you can see that price is being squeezed down here, right? On what I like is on the smaller time frame, you notice that we're on the 4-hour chart now. On the 4-hour chart, price is below Ichimoku, right? On the 1-day chart, price is also below Ichimoku. So this works on both time frames, which is great for me, right? It means that they're both, we're seeing bearishness on the higher time frame and the lower time frame, right? Now, okay, I'm just going down the 4-hour chart now, and I'm seeing this over here. Oh, sorry, let me come down to here. Let me just remove some of my drawings. Okay, so price is going down, is going down, is going down, is going down. How low can it go? Right? How low can it go? Right. So now the key thing is that if we see that there's so much bearishness, right? If we think that price is going to continue going lower, what do we do next? Right. The next key thing is to decide when would be the best time to sell. When would be the best time to sell? There is, however, one risk I notice over here is this little thing over here, is this little support line, right? This line is irritating because every time price comes down here, it bounces up. Comes down here, it bounces up. It comes down here, it bounces up. So this to me is a risk level, right? Price has bounced multiple times in the past on this level. So I would need prices, I'm afraid that price might bounce and continue to go up. So what I need to do is I need to use this as what we call a downside confirmation. Only when price breaks this level, right? If price breaks this level, then it might continue down further. Okay. If price breaks this level, then it will continue down further. So this is an important thing to note. You can find all the reasons why price might be bearish, right? Like a channel, bearish channel, bearish Ichimoku, bearish trend line, right? But you must wait. When it comes to trading, it's slightly different, right? Analysis is one thing, but once you have the analysis and you basically tell yourself, okay, man, Aussie dollar, AUD, USD looks really bearish, right? That means it looks like there's a lot of downside momentum. Once you have the idea in place, then you look for your trading opportunities. You try to put that idea into action, right? To put the idea into action, you need to know what is your entry. In this case, we can see that because this is a key level of support, we need prices to break this level to trigger the move down, right? So in this example, right, price needs to break this level. I'm going to call this sell entry. So price needs to break this level, and only once you break this level, then you can expect it to go down lower, right? How low can it go, right? It really depends, right? If prices goes lower, it might continue to respect the channel, right? I think that the channel, channel could continue down much further, right? So it could go even all the way down to maybe the next key support could be about here. We don't need to play the move too far. You could easily just play the move down to here, right? And you keep a very tight stop loss, right? That will make you a good enough risk to reward trade. Okay, yeah. So this is one example of using a high time frame to filter out some trading opportunities. I will continue to scroll through the different charts, but now there's another thing called correlation. Right, so Australian dollar and Kiwi dollar, what do you notice? I'm just moving between the two now. They are they tend to be very similar, they tend to move together, right? When one goes down, the other goes down. When one goes up, the other goes up. Now, let me teach you now the concept of correlation, okay? Correlation, so I'm going to click this plus button, AUD/USD, okay? And I'm going to put it on the same pane, right? And I'm going to change this to a line chart. What do you notice, right? I'm going to hide this Ichimoku. You notice that these two instruments, these two AUD/USD and NZD/USD, they tend to go down, go up, and go down, and go up, and go down, go up, go down, go up, go down, go up. They tend to go down and go up together. This means that they are positively correlated. So when one goes down, the other goes down. When one goes up, the other goes up. So based on this same theory, right? Based on this same theory, when one has a breakout, the other should also have a breakout, right? So in this example over here, right, we expect prices, right? You know, if price breaks this level, it should go down. If price breaks this level, Kiwi dollar has to break this level too, right? What do I mean by that, right? Is that this is the support level on Kiwi dollar. This level on Kiwi dollar is this level on Aussie dollar, right? If they both are broken at the same time, you get a very high chance that your breakout is going to be successful. But if they don't break out at the same time, one breaks out and the other one doesn't break out, then you know that there is something that is not, there's something that is wrong in the markets, right? That means there's a disturbance in the force, maybe, if that's what you call it. There's a disturbance in the force, right? It might be better for you to avoid that trade. So many times, I get questions asking, how do you avoid getting faked out of a trade, right? As in, like, how do you avoid false breakouts? A lot of us love to trade breakouts, but many times when we think that, imagine we're over here and we think that, okay, price has broken out. The moment price breaks out, we try to play the move down, but price then comes back up and then it stops us, it hits our stop loss. How do we avoid this happening, right? Because it's the more it happens, the more money we lose, which is not very nice, right? So one of the ways they can use to really avoid this from happening is what I call the correlation filter. Okay, so in this example, right, if this is the support level, then this will be broken. Once price has broken out from here, I would then look at our good friend Aussie dollar. If Aussie dollar, which we expect to break out from here, if it instead bounces up, right? So one is going up, in this case, one is going up, but one is going down. That means there's something wrong, right? That means this is likely going to be one of them is right. Basically, one of them is right, one of them is wrong, right? It's a false breakout. We would avoid trading this because we have a lower probability of succeeding. Right, we have a lower probability of succeeding because the markets are not moving in tandem with each other. However, if Kiwi dollar breaks out and then I go to Aussie dollar and it also happens to be breaking out like a bearish breakout, and then I know that the market is singing from the same hymn book, right? Both of them are moving in tandem, both are moving together, and that means that I have a higher probability chance of being correct. Okay, I hope that this concept of correlation helps you understand how to avoid getting caught in false breakouts. I do want to encourage you guys that if you have questions, right, you want me to look at a certain currency pair, you want me to look at a certain instrument, right, or you have a certain style of trading which you want me to give my feedback on, please just send it in the chat section and I'll do my best to look at them. Okay. Otherwise, yeah, we're just going to continue to scroll through. Oh man, this trade worked out so great, right? Yeah, this trade worked out so great. How I got into this trade, right? Let me see if I have an example on when I made this. I made the call of this trade live. Let me see over here. And I'm going to explain to you how I got it, and so maybe it gives you an idea, right? So this was made by me on the 28th of June, right? So I did an analysis on the 28th of June. I'm going to mute this, and the idea with the analysis is that on the 28th of June, we are calling for price to drop from here down to this take profit level. Look at the risk to reward. The risk to reward is like 1:1, 2, 3, 4, 5 or something. It's a great risk to reward setup. Okay. Now, how did I make this? How did I make this trade? Right. Clearly, we can see that the trade has worked out very nicely. Drop and is about at our take profit. Right. But how did I make this trade? Let me show you. When I was looking at this strategy, right, I'm going to do a bar replay. I think the market was about here. Okay. One thing I noticed, right? One thing I noticed is that I scroll back and I noticed that prices was dropping, lower and lower and lower and lower and lower. It was dropping lower and lower, right? So in this example, right, there is a very strong bearish. There's a lot of bearishness that's pushing prices down. Okay. At the same time, I was scrolling back and looking for support, right? It is clear to me that there is a very nice little support over here, right? Price bounce off it once, right? You can see price bounce off it once, and then it bounce off it again, right? So in terms of my take profit, if you notice, I don't play my take profit further than this level, right? The reason for that is because with such a strong key support level over here, it will be foolish for me to try to play my take profit all the way down, because price, this is clearly a big level of support. It is unlikely that price is able to break this and go all the way down. That's why we only play it to the highest degree of certainty, right? In this case, I'm very certain that price might go down to there, but you ask me whether I'm very confident that price will break out from there and go even lower. I can tell you that I'm not confident of that, which is why we need to play it safe, right? So in this example, I played down here. Now, how did I get this trade then? Right? What I did was, when I look at the chart, I threw up my Ichimoku, right? I noticed that price has been respecting Ichimoku very nicely, right? You can see it takes, it go down. Below, it go down. It tested, it go down. It tested, it go down. Tested, it go down. Go down. It tested, it go down. Now it's over here again. It's testing it. So you will tend to notice that there's this certain pattern in Ichimoku. If you notice that the recent price movements have obeyed Ichimoku very well, like it has been testing it and it has been behaving well based on Ichimoku, then you can use Ichimoku. When is a bad time to use Ichimoku? Rather, a bad time to use Ichimoku is when prices are ranging. Right, so maybe give me an example when it's ranging, like here. This is when it is ranging, and it's a terrible time to use Ichimoku, right? It goes up, goes below, it goes above, it goes below, it goes above, it goes back above, right? It goes back below, it goes back above, it goes back below. So in this example, right, Ichimoku is not that great, right? Ichimoku has a lot of what's the word for it? There's just way too much noise, and you want to stay away from Ichimoku. You want to stick to Ichimoku in moments like this, right, where there's a clear trend, right? To trade using Ichimoku. Okay. So anyway, back to the latest drawing that we have over here. How did we manage to call euro dollar? How do you manage to call this drop on euro dollar so perfectly, right? Quite simply put, after I've established that Ichimoku is pushing prices down, I then look at chart patterns, right? One of my favorite chart patterns is the channel, right? So I notice that the channel is also suggesting that prices will continue to drop more, right? Because it has been reversing, and it's testing this level over here. So I got the channel, I got the Ichimoku. Two reasons why price might be dropping, might continue dropping. And then I look at the resistance level. We have a very nice overlap resistance over here, right? Overlap resistance, you look at the past webinars we did for IronFX, it will explain to you what is this overlap resistance. It's a very good way to find reversals. Okay, overlap resistance is my third point why price might be dropping nicely. Okay, so these 3 points add up together, we figured price might drop. But how far can it drop? How far can it drop, right? In our example over here, you can see that we only call it to the recent swing low. So in trading, it's important for you to know exactly where is your take profit. There must, a lot of people tend to focus just on the entry. right? A lot of people focus on getting this entry. Once they get the entry, they randomly put a take profit, they randomly put a stop loss, right? Which is a shame, right? Because the take profit and stop loss levels are as important as the entry. Let me repeat that again. Your take profit and your stop loss levels are as important as your entry. Okay, so in this case, once you establish the entry, you need to spend an equal amount of time to decide where your take profit is going to be, right? Don't just throw your take profit to any random level. So a lot of what's the word for that? A lot of forums out there, maybe on Baby Pips or these Instagram traders, they just give you a very simple trading strategy. They say that, okay, when you see a trading pattern, give yourself 50 pips stop loss and 50 pips take profit. Okay, let's see what will happen if we did something like that. Okay, I'm going to remove this. Oh, not 50. Let's do like 500 or something. So we have a short order over here. So bam, this is your trade, and you put your take profit. Let's just say you put your take profit at 500, no, at 300. So you notice your take profit is, you look carefully, right? There's this number 307.4, right? 307.4 is 300 pips of profit. So sometimes when you look, these trading educators out there, right, they say just put your take profit at 300 pips or something, right? So the problem with that is that if you were to put your take profit at 300 pips, your take profit will be down here. Okay. However, there's a key support level over here. Right? I'm going to put this as a support, which is green color, right? And this is your take profit. Let's not worry about our stop loss first, okay? Let's not worry about our stop loss. Let's look at take profit, okay? What happens is that price then drops down to here. And when it drops down to here, it touches this level and then it bounces up. That's the problem with having a take profit that is beyond a key level, right? Most of the time, it might cause you to miss your take profit. There's a rule that I want to say. Take profit is, you know what, I'm just going to write it out instead. Take profit before key level. Stop loss beyond key level. This is an important point that you guys need to know. I'm going to make it so big so that you guys can see it, right? Put your take profit before a key level and put your stop loss beyond a key level. That will give you that will instantly improve the hit rate of your trades, because in many situations like this, right, if you randomly put your take profit at 300 pips, like down here, what happens is that price will go down. Okay, and when price goes down and it touches this key support level, it bounces up. And then you're wondering, oh man, is the market being is the market being manipulated, right? You're wondering, man, why did price bounce up from here? Is the market being manipulated? Why? How can it just avoid my take profit and just it just goes against my trade, and maybe goes all the way to stop you out, right? The reason is because of your take profit placement. There's a better way to put your take profit, and that is putting your take profit before any key level. Okay. The opposite is true, right? That means your stop loss should be beyond a key level, right? You should always put your stop loss beyond a key level to give it that bit of breathing space, right? Just so that you don't get stopped out when price goes to your key level. Okay. Important considerations. Now, we do still have a little bit more time, guys. I see quite a number of additional guys streaming in here in our trading strategy clinic. I'm open to taking your questions, right? So if you have a particular trading style or trading strategy that you want me to take a look at, or you want to share and I can give you my feedback on, let me know and I'll do my best to look at them. And also, if you have a instrument that you want me to look at, maybe euro dollar, pound dollar, or gold or Bitcoin, If there's a particular instrument you want me to take a look at, let me know too, and I'll do my best to get to it. All right. Now, okay, so this is on euro dollar. Let's see some of the other instruments around, right? Which one has, so when I'm looking at stuff like that, right? If I'm looking at stuff like on the 1-day chart and I see this, I know that there's almost nothing I can do to trade. It's so hard to trade this, right? Just price is just going up and up and up. So I tend to avoid it. Pound dollar, I like to zoom out, see if there's any key level which I'm missing. Not really, nothing nice on pound dollar. Swiss franc, nothing much too, right? So I would then scroll through the different charts, right? And I see if there's anything I'm missing, right? Interesting here. Interesting. Still waiting on a couple of key levels to be broken. This one maybe. Pound franc might have a trading opportunity. I'll be sharing with you guys in a bit what I think might happen with pound franc. Pound franc has idea. Okay, so this is really honestly what I do every day. I just scroll through the charts and I see if there's anything that jumps out at me right away. I go in, I go out, I just zoom in and zoom out, look at the key levels, and all right, maybe we have, oh man, this trade worked out so nicely. Okay. We got EuroCAD. Oh, EuroCAD looks interesting. Is there another big level it might drop to? Okay, so this is the thing I noticed about EuroCAD, right? It's another nice trading opportunity I'm seeing. Nice bit of bearish Ichimoku cloud that is holding prices down. So we have one reason why prices might go down. I like this. I like this little bit of a, price is going down, 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 down. It's going lower and lower and lower. Right, it's a very, very good sign for me that price is in a nice descending trend. The important thing that I need to do now is I need to look for a breakout. I can see that price broke bounce out, bounce twice, bounce 3 times. It might be bouncing a 4th time over here, but this is my key trigger level, right? This is my trigger level. I put it over here because if price is able to close below this level, I am pretty sure. All right, I'm pretty sure we're going for a free fall, right? So this is my sell entry. If price is able to close below this level, we might go into a free fall. Where would it free fall to? This is where I will zoom out, zoom, right? And I realized that, whoa, the only level it might free fall to next is probably over here. This is the next big free fall level, which if you look at it, man, it's a very, very good juicy trade if it works out nicely, right? So of course, in this example, our first need for prices to break below this level. Once it breaks, it should trigger a drop. It should trigger a big free fall all the way to this level. And this was the big level since April 2015. One big bounce. Price hasn't came back since, but this is clearly the big support level to watch out for. Okay. Now, I hope you guys found this session useful. If you have not joined the VIP room, please head over to IronFX, vip.ironfx.com, right? Register for a free account over there. As long as you have $250 in your IronFX account, right, you can send a screenshot over to me, right? You just need to click request access and send a screenshot over. If you have $250 in your IronFX account, you will get access to the VIP room where you can ask me questions. You can trade alongside me. You can ask me, you can see the trading ideas, the trading signals that we're going to put inside here, right? Many high probability setups that you can look at and you can take your trading to the next level. But first you need an IronFX account with a minimum of $250 in it to get access to this. Okay, guys? If no one else has any questions, right? Thank you so much for staying with me throughout this entire webinar, right? Nice to see you back here, Natalia, right? Hope to see you in the VIP room. It's going to get a lot more active, right? Once we roll it out to out of this beta testing phase, right? It's going to be a lot more active and there's going to be a lot more training ideas that are being shared in there. Okay, I hope to see you in the VIP room. Thank you, Sahid. Yes, please, if you can, head over to the VIP room and you can practice your analysis there with me, right? We've got a strong team of prop traders, professional traders, trade for a living, right? And of course, you get access to the My Trading Ideas too. Okay. Thank you very much, Natalia. Thank you, Sahid. Thank you, the rest of you guys. We got Javette, Simon, Merritt, Kelvin, right? Thank you, guys. Hope to see you around the VIP room. Take care. Stay safe, trade safe, and peace out, guys. Take care, everyone. Bye-bye.
Hello everyone, my name is Emily and welcome to another of our informative videos. Today we are going to look at balance and equity. Balance is the starting balance of your account. It basically refers to the amount of money you have in your trading account. If you deposit $1,000, your balance will be $1,000. If you open a new position, your account balance will not change until you close the position. Your balance does not include any profits or losses you might have from any open positions. If you have open positions, your balance amount depends on losses or gains you've made once you close your trade. So basically, your balance will only change when you add more funds to your account, or when you close a position, or when you keep a position open overnight and either receive or pay swap fee. The balance amount is shown in the MT4 terminal window below the Trade tab on your MT4 client terminal. Now let's also take a look at equity. Equity represents the current value of your trading account and fluctuates with every tick when looking at your trading platform on your screen. It is the sum of your account balance and all floating profits or losses from your open positions. In other words, equity refers to your balance plus any profit or loss from open positions. However, if you don't have any open positions, then your balance will be equal to your equity. The equity amount is shown in the MT4 terminal window below the Trade tab on your client terminal. Your equity continuously fluctuates with the current market prices as long as you have open positions. As your current trades go up or down in value, your equity does the same. Thank you so much for watching us today, guys. Bye-bye.